You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back on the scene here for episode 2 of the Option Block, what the cool kids call the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling network upon which so many of you are binging these days. If you love your on-demand, we're happy to serve your needs across a broad variety and endless legion of platforms. It's pretty much, if there's anywhere you want to go for on-demand audio, chances are good that our stuff is probably there. And of course, if you want to go above and beyond, join us live throughout the week, get in on the pro Q&As, as well as options oddities. We've been sneaking a little bit more live trading into options. That's been kind of fun as well. I know you folks are liking that. So if you want to join all that fun above and beyond, get in the drawing for the December Pro Options Insider Crate. Well, you know where to go. theoptionsinsider.com/secret club. Just me and you talking. Don't tell anybody else. It's a secret. And of course, however you listen, whatever platform, device, whatever time frame you listen upon, keep hitting us up. Questions, comments, insights, pearls of wisdom. We do love to hear from all of you. Yes, even you. We like to hear from you as well. And let's see who we're hearing from on the old program today. First, let's go out to the quiet, the sleepy, nay, the tranquil hamlet known as St. Charles, where not much ever happens except for eating some tasty, delicious gyros and drinking some delicious lemonade. Yes, it is St. Charles, where we are joined by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here, and not to steal someone else's tagline, but I can't resist. Nobody out-uncles the mic.
Yes, there we go. I like that. All right, I can roll with that here on the show. As we head farther afield, back east, listeners, dial the machine all the way back east. You literally can't go any farther east and still be in the continental United States. Right as you get to the end, you'll see one little blip way there up north on the shores of Maine. That is the GIOVINAZZI compound. Don't be confused. Don't try to wipe your screen off. All that gray there, it's always there. It's not a blip on your screen. It's the smog and smoke and haze that just lingers over the compound 24/7 because it's always dark. It's always stormy on the shores of Maine, where he joins us, the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Is it apropos to say that no one outrocks the lobster? I don't know if that one rolls off the tongue as well, Mr. Robson.
What is it? Nobody out-uncles the mic. I think that's pretty catchy, actually. That's pretty catchy. Does anybody outrock the lobster? I don't know. Maybe the B-52s. I'll give it to them.
Yes, the B-52s, upon which I stole that as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, let's do it. As our chat says, another wild day in the market. Yeah, it's shaping up to be another weird one. This is another reason why shows like the Option Block and Vol Views, you can't really do a lot to prep for them ahead of time aside from certain segments because we are subject to the vagaries and the whims of the market. And away we go yet again. It seemed like we were shaping up one way this morning. We're a slight mix, a little bit of green, a little bit of red on the screen. Nothing too dire, really, in either direction. And now coming into the start of the show, we are tipping more into the dire red category, particularly in NASDAQ land. NASDAQ saying, look out below, off over to almost 2.1% already. So I think that qualifies as a pretty dire red day. S&P not quite there yet, off, coming in on 0.2% or so, closing in on 0.2% to the dark side, fluctuating between about 0.5% and 2/3 in that range. And then Dow still managed ever so slightly to be green on the day. So it's one of those weird mixed days. I have a feeling this isn't going to last very long. So wait a few minutes and we'll see Dow start to darken. But still, an intriguing day nonetheless. If you looked at the vol screen just, let's say, an hour ago, you would have seen a very different picture. Now coming into the start of the show, things starting to firm up again. After yesterday's rally, we had Mr. Powell. Everyone was waiting for Powell yesterday. We kind of waited with bated breath, and then he came out, kind of clipped the wings of vol, sent the market rallying plus 1% to the north there. A lot of vol got squeezed out. Now we're starting to see some of that vol come back in. Coming into the start of the show, we were at about a 20.5 in VIX cash. That's pretty much literally unched from Monday's show. Not that long before showtime, we were down still about a point. So that vol creeping back in, not even creeping anymore. It's starting to really gush back in. VVIX at about 127.5 when we kicked off the show, puts it up over 5, about 5.5 points. That was up only slightly not that long ago. VXX at 21, still down, but down less, a lot less than it was not that long ago, down about 0.5 point now from Monday's show. And UVXY, it doesn't take much of an excuse for that one to just get annihilated. And after Powell yesterday, it did. It got down into a 14 handle. Now back when we kicked off the show at about a 15.10, that puts it still down, but only down about 0.5 point or so from this time last week. And of course, Vol Q with NASDAQ firmly in the grips of a sell-off. That one's at about 23.25 when we kicked off the show. That's up nearly 2 points from this time last week. So a lot afoot. If you were wondering, maybe yesterday signaled the death of vol and it was all moving behind us today, perhaps saying, hold your horses. Not so fast. Let's go around the horn the opposite of the way we came. Let's go back to that perpetually dark and stormy portion of the map, the shores of Maine, where we are joined by the rockingest of lobsters. Mr. Lobster, sir, seems like we got a little bit more vol on the screen. It's been a while since we've had a cameo by Volman. Why don't we bring him back and see what he has to say, sir?
Well, Volman surfed the vol down this morning, and on the vol blip up, I actually closed some of the puts I had. I never thought I would close the 20 puts today. But
look at you having good timing. Who is this person?
I just, well, you know what? It was at this point, I'm expecting VIX really to kind of sell, at what point when we're at 4,700 SPX does the vol go down, right? At least to 17, 18, something like that. And I believe we kind of sniffed. What do we sniff? Like 19 this morning, maybe. We might have even sniffed. I think we were like in the 18 handle for a little bit. And but I didn't get. I did have some offers that got lifted this morning, and then but I only sold about half of the puts that I owned, and then by. Yeah, we were at 1872, and I'm like, okay, this should be, like vol should come up, and then it just kind of stayed bid, so I got rid of the rest of everything. So I'm not complaining. I was hoping, but every time you hope for big money with VIX puts in the COVID era, you can be really, you can end up being sad and grumpy.
Are VIX puts becoming the new calls where you only have, let's say, a few minutes, or in this case, probably like a few hours to really capitalize on them these days, sir?
Yeah, like if you would have told me that the best prices you could get for the 20 puts this cycle were $2, I'd be like, no way. But you'd think the 20 puts would be pretty reliable for like a $2 or $3 gain, but not really.
20 I had a boatload of 20 puts going into the last settlement, and no bueno there. So yeah, I'm with you on the 20 strike, sir. It has, shall we say, underperformed of late.
Yeah, surprising. I mean, the only those puts did get down to 20 cents or 30 cents last week. So I mean, there was a chance for a huge return. Mark bought a bunch of them at 30 cents, the little rascal. But as far as like vol goes now, we still could see VIX like 18 or 17 next week. But at least right now, like the Qs, I think are making people a little bit nervous. Some of the valuations, with rates, I can't see how rates don't start going up. And historically has never been great for tech stocks, that are valued as highly as the ones we have now. So, I mean, today looks like just a little bit of a sector rotation. So people are dumping some of their expensive tech and they're buying like commodity stocks that have just gotten shredded. So, and here's what is surprising. So what stock is up 50% in the last 2 months? Pfizer, if you can believe it. I think I was
going to say Ford, but I think Ford goes back a little bit farther than 2 months. But yeah, Ford's had a good run too. But Pfizer's had a good one as well.
Yeah, I mean, Pfizer was $53 last week. And let's say here, 30 days ago, it was $49. And 2 months ago, I believe we got down to like 42 or 41 bucks. So like apparently we're beginning boosters and boosters and boosters on top of the boosters forever, which is kind of what the market is saying. So, and as of right now, we'll see what happens, with vol, and how big this sector rotation actually happens. Because generally, if people are selling a bunch of stock over here and buying stocks over there, SPX doesn't move very much. So, and that's kind of what we have today. SPX is only, down 18 handles or something. So we'll see if that actually manifests itself. The only thing Volman would say is you still kind of have a little bit of backwardation action in the very front of volatility, which is not necessarily a bullish thing. It is more actually, I think, bullish. It's not bullish movement of vol, but just like VIX, it's more of VIX can move a lot up or down. So waiting for movement to happen in a relatively short order. So I just think from that point of view, and I'm looking at the curve now, you still got it. Like we're still a little bit backward here. So I would say there's still a little touchiness. Actually, we're VIX is 20. So of course, yeah, there's still a lot of touchiness in the market, at least right now. So I would say unsettled. The market is still unsettled to some degree.
Deeply, deeply unsettled is Volman. By the way, while you were talking, I was just curious. I pulled up Ford for myself, and it's up about 40% in about 2.5 months. So it's close to that metric, but not quite.
Wow.
Not quite the 50% I was thinking. But I knew it was pretty darn close to that. So yeah, a couple of different areas where there's been some nice runs of late. Where there are always nice runs. It's out there in St. Charles where they're just long equities till the cows come home. Once in a while, maybe they buy a put. Mr. Uncle Mike, sir. Let's lighten up your tape out there today. In a day that started off maybe seeming like it might have a little bit of bullishness to it, then as the day has drawn on, less so and less so, sir.
So I don't understand why it seems like we rallied a lot yesterday just on the word transitory, and that he's not calling it transitory inflation anymore. Because what reason did we have in that he didn't say anything new besides getting rid of transitory. And Scary Jerry, that's going to be my new term. I'm going to coin that in case no one else has. Scary Jerry for Jerome Powell. Get it? Ba-bum-ch. Scary Jerry said that he's still planning on doing 3 rate hikes next year. which is fine. I get it. I'm not against it for that. I'm just trying to figure out exactly why we did rally to the levels that we did just over the word of taking away the word transitory. So the markets just took off like a bat out of you-know-where yesterday. And so with that, it kind of ran to a little bit of resistance around the low 4,700s for the S&P 500. The Dow, I think I know the trick to this market is that the second you started talking about the Dow, Mark, it was up 9 points, and I've just literally been watching it. It's up 70 points. So you just need Mark Longo to talk the Dow up, and that's how we solve all that problem right there. But in looking at this, for today, I agree with Andrew in that this is a lot of sector rotating going on just because of the fact that financials, XLF, is up about 1.6%. Energy, XLE is up just under 2%. So we have some bullishness out there. It's just that we have technology getting the crap kicked out of it. So on there, I think this is just kind of one where I don't know if yesterday's rally had much to do with what the Fed was saying because of the fact that it really wasn't anything new and earth-shattering, I didn't think anyway. So we have that. We've had a few buyers coming into the 10-year note. It's really not that much higher than where it was a few days ago. So there's not a giant sell-off in bonds right now of everyone being scared, oh, rates are going up, we better get out of our bonds. So we didn't have that sell-off yesterday because of the fact that I don't think there was anything new or earth-shattering to what was being said. Right now, the 10-year is up a little bit, roughly 0.2% on the day, and it was down a little bit yesterday going into the announcement. So we really have not had a ton of movement. It is up a little bit on the week, but not anything of major significance. Now, the other thing, we are up slightly in silver right now. Not a lot, but we are up a little bit. But just, I think the main thing as to what's going on right now is that people are getting out of tech and looking to go elsewhere. And so combine that with the fact that going back to something Sebastian said a while ago, that little rascal, I think we need to start calling him a little rascal. I like that one, Andrew. That's really good. What the little rascal said a couple months ago is that a lot of times when we sell off, we don't have that second leg of the sell-off because people already have puts because volatility is so much higher. And so right now, I mean, 20 is definitely not 40 in the VIX, but it's definitely higher than 9 or 10 of the world with which we lived a couple of years ago. So when we do sell off, oftentimes we're not getting that second leg to the sell off. And I think that's kind of applying here as well today. So I'm of the school of thought that, of course, I think the markets, I've never met a pullback I didn't like in some way, shape, or form. And I'm definitely the long-term bull with which I am. But I think right now, I think yesterday and today, it's a lot of people just repositioning things. And I also think that it's a lot of times people are kind of sandbagging for the end of the year as well. So that is my 2 cents coming at you from the Sleepy Hamlet.
The Sleepy Hamlet, indeed. Let's see if the markets are sleepy out there, at least from an options volume perspective. Let's go back out to VIX. VIX has been having a good couple of weeks from a volume perspective. Forget about directionless. That's a conversation for another day and potentially for Volman out there. But the VIX ADB continues to creep north over 700K now. Just broke it recently. 704,000 contracts. That is the ADB for VIX right now. It's been quite some time since we've seen a level like that. Probably the nadir of the sell-off during the dark days of 2020 out there. And maybe at a portion towards the latter, maybe around the election. I'll have to go back and check. But it's a very infrequent occurrence that we have such a robust ADB out there in VIX land. 310 on the tape right now. Will it hit that ADB today? I don't know. But the way we're trending right now continues, there is an excellent chance of that. SPY not waiting for anything. 3.62 million contracts on the tape already. The ADB a little bit shy of 5.5 million out there. S already closing in on 1 million contracts, 955,000 contracts right now. The ADB doesn't really change much out there. It's been 1.63 million for a while. The Qs already at 1.3 million. The Qs aren't playing around today either. ADB 1.8 million. I mean, we're talking some numbers here. And if that's not enough, small caps, at least on the IWM flavor, 726,000 contracts. The ADBE out there also a million, 1.02 million out there. So outside of the S, which is closing in on a million, everything else is well over a million out there now, which is impressive to say the least. Not that long ago, about a month and a half ago, small caps are at about 563,000. So we had that crazy Santa Claus rally, and then this massive correction and sell-off. It's been crazy town out there in small caps. You want more small caps and everything else? Futures, options. Stay tuned for TWIFO coming up in a little over an hour. I'll be joined by Derek Salmon, a.k.a. the guy who kind of runs all of the options stuff. He's everybody's boss over there pretty much, almost, except for Terry over there at CME. You get our annual check-in of everything that's cooking from a futures and futures op, probably some vol perspective too. He's kind of the guy behind a lot of the C-vol over there. So probably get an update on that as well. So always fun to check in with him. Stay tuned for that a little over an hour from now. Let's go on out now to the single names. See what has blown the doors off from a single name perspective. This list, I think to call this list tumultuous over the course of the past year is underselling it tremendously. It's been fascinating to watch what's been going on in this top 10 most actives every day. By the way, you don't have to wait for Option Block Showtime to find out the most active listeners. We post this for you every day, twice a day over there on the website. I bet you didn't know that if you haven't been over there in a little while. We do our midday most actives and end of day most actives. So if you want to see your top 10 every day, twice a day, you can do that. TheOptionsInsider.com. And hey, we like you. We put all that out for free because so much data we give you guys just for free over there on the website. We must really like you folks. All right, let's go out now today. Let's see what number 10 is. Cost you about a little over 250,000, 256,000 contracts to break into the top 10 right now. That gets you to AMC. So the former meme king still hanging out there in the top 10 out there right now. The meme's dead. That's been a question people have been kicking around for a little bit. Maybe that'll be a fun question of the week next week. Stay tuned. Number 9, Bank of America, back in our top 10 again this week, 272,000. Been a while since we've seen them up there. Number 8, Telephone, a.k.a. AT&T. I can't even get the old school SIBO guys out of my head. No, Telephone. That's telephone, kid. I never understood why they call it telephone outside of the obvious. It's never easier to say telephone than it is to say AT&T. But I digress. A conversation for another day. AT&T, number 8. 392. All the way, number 8, we're already almost at 400K. Number 7, Facebook, 426,000. So it doesn't cost you that much to break in. 250,000, that's decent. That's impressive, but it's not to blowing your doors off. We get up to 400K pretty quick here in the top 10 today, which is interesting. Again, number 7, Facebook, 426,000. Number 6, the aforementioned Pfizer, 431,000 contracts on the tape today. Number 5, the other half of our freshly coined symbol twinology. Look that one up in the Urban Dictionary. 484,000 contracts out there. Number 4, Ford, another aforementioned name out there. Once again, lighting things up. What's it up to today? Let's see. It's up on the HAP's last 6 months, actually up about 40 cents today. So getting a nice lift. Bucking the trend. One of the reasons we have a slight bit of green perhaps on the screen today is Ford out there. Good for 620,000 contracts out there today. Number 3, NVIDIA, 758,000 contracts. Numero 2, it's Tesla, 899,000 contracts. Do you even need me to tell you what number 1 is, listeners? Yeah, it's the fruit company. This is kind of reminiscent of when they're talking about their previous split talk back then, all that paper started flocking in. Ever since they cut this secret deal, or I shouldn't say cut it because it was a while ago, but it was leaked. It seems like the paper has just gone to another level out there. 2.1 million contracts right now. And before you ask, yes, there are a ton of calls going out tomorrow that are hitting the tape. Right now, my goodness, 284,000 of the DEES 180s going out tomorrow are hitting the tape, listeners. Followed by the DEES 177 halves, 234,000 of those. My goodness. So you're already over 500,000 just in those 2 contracts. Yeah, this weekly Apple call palooza is just something to behold. If you want to go a little bit farther out, dare I say it, all the way to December 23rd, then 144,000 of the 180s and expiring next week have also traded. Then the 175s going out tomorrow, 140,000 of those. And to round out our top 5, we have the 182 halves also going out tomorrow, doing about 90,000. This is ridiculous. My goodness. All right. Let's keep on rolling and see what else is lighting it up out here today. Not a ton of earnings, even though the latter portion of the week still has some names popping off. We had Lennar before the bell yesterday. We had Adobe, FedEx, and Rivian, their first announcement. So that'll be interesting. They went public back on November 10th listeners. And then today, if the meatball was here, I could mock him for his love of Darden restaurants. Not today, tomorrow, actually. Darden restaurants are tomorrow. That man cannot get enough Olive Garden breadsticks out here. Let's go to a couple of them that we have here on our freshly updated earnings move results reports available over there on the site for you right now. Hot off the presses from the folks over there at ORATS right before showtime, listeners. Adobe before the bell today. They were going into their announcement 6.30 and a third. They were pricing in 6.5%. They delivered 8.5%. They were at 576.5 when this report was run. So an interesting move out there in all things Adobe. I don't have RIVN. That's why, because RIVN's popping off later today. So I don't have their move results reports yet, but I have an updated move report. They're at 115 as of this report. They were pricing in 1018. So looking juicy. Is that too much? Is it too little? We have no idea. We will find out today after the bell. FedEx 240.78 is where they were trading. They were popping off. They were pricing in 1585. In the past, they moved 1563. So wow, not a lot of wiggle room there at all. They're kind of keeping things exactly in line, which again, interesting. Logistics have been a challenge this year heading into the holiday season. You'd think maybe FedEx would be a little bit more volatile, but perhaps not. And then we have good old DRI, Darden Restaurants, tomorrow before the bell. 149 is where they were trading. They're pricing in about $8. In the past, they moved 1013. So less vol out there in the breadsticks land of Olive Garden. Intriguing. All right, we got some other ones popping off next week. We got good old Rad popping off next week. They're at $12.39. They're pricing in about $1.50. In the past, they moved $2. So less vol on Rad. You'd think, that pharmaceutical front end sector would be a little bit volatile right now, given everything that's going on in the broad world, but apparently less volatile, according to this. You've also got Nike on the 20th after the bell. 164 is where they were trading. They're pricing in 9 3/4. In the past, they moved 1035. So less vol in the sneaker and athletic apparel department. Interesting stuff. Updated earnings trades reports as well, including some entries and exits here. You can check all this out for yourselves over there. TheOptionsInsider.com is the place to go to begin your journey. So in case you're wondering, in the free data realm, you get the earnings move, you get the earnings move results, you get the earnings season, and the earnings trades reports. And then on top of that, you get the everyday, midday most actives, and end of day most actives. We really like you folks as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, let the party commence. It is time for the Odd Block as we unleash our Eye of Sauron here once again. Man, this one has been busy all year long. Our Eye of Sauron's going to ask for a raise next year, I have a feeling. He's been putting in some good work this year. Double duty, also diving in over there on oddities. So it's been a fun journey, fun foray throughout 2021. Hard to believe this year's drawing to a close, but c'est la vie as we keep on rolling. Let's go back out. Let's unleash the Eye of Sauron once again. Let's see where he fixes his fiery gaze today. Oh, we're going back out to TECK. This is TECK Resources Limited, ticker symbol TECK, TECK. It was previously known as TECK Cominco. This is a natural resources company out of Vancouver, BC. And let's see, we talked about them on the show before. We'll do a quick kind of rundown of where they have been. Trading right now at $27.35. A year ago, they were $18.39, so a wee bit shy of where they were trading. They've had a kind of a slog to the upside. It's been mostly upward, even though there have been some fits and starts along the way. It popped in February up to nearly $24, then sold off again down to 18, popped again in May up to 26 and change, then back sold off again by June back to $20. Did that a few times, 27 in September almost, then back down to 23. Then it hit its high for the year of almost $30, $29.92 on October 18th. And it's been kind of drifting down ever since with a few pops along the way, but mostly drifting down. And let's see, it got down to $25.76. Then it did pop recently on December 8th, back up to about almost $28. And it's kind of been drifting lower again. So The trend has been lower ever since October 18th, even though it has had a few fits and starts along the way. So an interesting year. Net on the year, it's up about 50%, so not a bad year for tech. Let's go out here, see what our Eye of Sauron found. Looks like Mr. Rock Lobster. We got somebody doing a bit of the old roll. Perhaps rolling down some of their optimism, keeping the party alive, but maybe a little bit less energetic. We've got looks like the Feb 31s. Well, actually, we'll take that back. The first thing that came across our radar were the Feb 29s going up almost 10,000 times, 9,978 times for $151, pretty much lifting the offer out there. That's a 46 vol. And we saw that and said, that's interesting. But it had the whiff of something else was afoot about it. So we sent our Eye of Sauron back, said, go dig deeper, find more. And it came back with, aha, there was another leg to this. And it was exactly 10,000 of the Feb 31s going up about a minute prior for 87 cents, right on the bid. And the stock was pretty much right around here when this went up. So they were opening on the 29s, closing, it appears, on the 31s. Hence the whiff of a bit of the old roll down out there, which is kind of interesting. You know, this is one of those ones where it seemed like someone had a bit of optimism. And, 31 isn't the craziest strike. It got up to almost 30 not too long ago. So saying it was super crazy out here is not exactly true, as I try to pull up when these 31s were actually open. Mr. Rock Lobster, while I dig for that, what are your thoughts on what appears to be a roll down, but not a roll out, not adjusting any time, keeping everything in the Feb cycle, just going down a couple of handles in everyone's favorite Vancouver, BC mining company, Teck Resources? This is the portion of the show where you talk, Mr. Rock Lobster.
You know what? It's been a while since I missed the mute button. It's been a while.
I'm gonna buy you for Christmas a giant mute button. You can just hang around your neck, maybe, and it flashes.
You'd almost think this is my first show. But it has been 10 years.
Has it been that long for you? Man, I know you joined later, but yeah, it has been a while.
It like 10 years ago was my first show, if you can believe that.
Do you have the actual date when you first? I know you beamed in with the meatball once from like the Street HQ or something.
Yes, I did that beam in, and I believe my first show, I was actually working with the 3D, that technology company that we were trying to get the
Acumen.
Yeah, Acumen. That was a financial technology company. We thought we would take the world by storm with 3D stuff. It was really cool, but I just realized that retail, it ain't gonna work. So anyway, yeah, I'm going to say my first show was October of 2010, if that's possible.
Really? Oh, yeah. So you're over. You're 11 years now.
I did one show early because I've been with Mark now since November 2011. So it's been 10 years. It's amazing. It's hard to believe.
It's terrifying. In January, it'll be 15 years for the network, which is even more terrifying.
Really? Oh
yes,
my gosh.
We're going to have a big party or some sort of palooza to celebrate that, I think.
Your timing was good getting into this podcasting game.
The birth of options podcasting way back in the dark days of January 2007, when people were like, what the hell is a podcast? This is pre-iPhone, pre-really iTunes becoming omnipresent. So people had no clue what the hell I was talking about. Hence the name, Options Insider Radio, which has stuck ever since. But I digress.
And you know what now, of course, you're asking me about tech. I have to say, this is not one of my favorite type of trades. I would, this is again, assuming they're already long at 31s. They're just closing them for what they could get. And they're rolling down to the 29s to try to add a little bit of more bang for the buck, try to get that press up. So it could work, but you'd rather follow the trades that they hit it right the first time. So I'm not sure again, but I believe that's kind of what the case is. And I believe, and it looks like they added a little more volume to the 29s. So they're trying to throw a little bit more fuel on the fire. No, I guess not. So 10,000 of the 31s, and it looks apparently the block size is a little less of the 29s. So But if you look at it right now, as TOSAW was saying earlier about the sector rotation, all of a sudden these value stocks don't start to look bad. You get, the multiples on these technologies, all these commodity stocks are really low. I mean, TECK is trading at a 5 times multiple to earnings. So, you could buy Apple at 35 or 40 times earnings, or you could buy a little basic material company that's going to be selling all of their wares to everybody, like Apple, for 5 times earnings. So I think there will be some sort of reconciling with all of this at some point. But
all right, I pulled up these calls. They were opened on September 10th for $1.30. So they're already out about 43 cents, 10,000 times. So $430,000. That's a bit of an ouchie. But they're coming back to play. They're putting $1.50 back on the line, Mr. Rock Lobster. They're saying, yeah, let's go back to the 29. When you roll down, would you typically give yourself more time, or will you keep it in the same month?
I don't like rolling down. I would prefer just to be done. All right, I'm down. I'll just be out and just wait for another entry, or write a lower put, let's say. So the roll down is not my favorite, because you don't roll down because you're right. You're rolling down because you've been wrong.
Yes.
So it's
very rarely do you
in a wrong trade.
Very rarely do you roll when you're correct. Yes.
I try not to add more to the wrong. I guess there's doubling down, and there's something to be said for it. I don't think it's a great habit, especially for retail traders. You can you're like, I'm going to be right. I'm going to be right. I'm going to be right. And you can keep doing that for a long time. As the stock goes from 50 to 20, look at if you did that with Robinhood, let's say. I thought there was a squeeze going. I was short some puts, and the vol was so incredibly high. Actually, Robinhood went down, and the puts really didn't even change in value. But I thought it was going to squeeze up. It didn't, so I just closed them. And, if I didn't, that was 11 points ago. So Robinhood went from 30 to $18 or $17. So it's like, listen, if it ain't going the way it's supposed to go, I don't want to add more money to it, to be honest. So that's just me. Maybe the listeners have a different point of view on that, but I just don't think it works very well with options, because you have a finite lifespan on that trade.
Those are words of wisdom to live by. You don't roll down when you're right. I like that. Well said, sir. All right. Let's keep on rolling. Let's see ourselves. Let's see if these people are right as well. Our cup overfloweth with trades to watch, listeners. I don't know how we're possibly going to pay even the vast majority going off in December off by the end of the year, but we shall endeavor to do so. First, let's go back to November 11th. Let's go out to Wendy's. We haven't talked about Wendy's in a little bit, but they were hot and heavy back in the days of November. Ticker symbol WEN, of course. Trading right now, I could give it to you. Why not? 22 and about a third, up about 3 cents on the day. So Wendy's actually bucking the sell-off trend out there today. So it's not all red all the time, listeners. At the time, listeners, we profiled some line in the sand puts on the 20 strike. Paper coming in, blasting out 5,575 of the D's 20 puts, getting about 30 cents for them, 29 cents. That was about a 28 vol when these went up. The stock was a little bit farther south at the time. It was 21.21 when these went up. There were no earnings. The next earnings cycle is in February, so they have some time. And I just told you where the stock is. The stock's at 22.35. Let's just look back over the course of the last month really quickly and see if they had any moments of concern. And yeah, you know what they did? Because the stock was 21.21, like I said, when it went up. The stock got up to about $22 and was hovering around there for a while until late November. Then it got hit from, I wonder why. What could have happened right around November, a little bit after November 24th that crushed everything? Oh, Omicron, perhaps. It sold it off down to 20.38. So it looked like it was about to break the 20 strike. So this person had to sweat a little bit during the height of the Omicron madness. Then, that Omicron thing was short-lived, at least so far it has been. And Wendy's reflected that. It was trading $21 again by, let's see, hit the nadir actually on Wednesday the 1st. So it wasn't on that Monday. It was on the Wednesday. And then it started rallying. By the end of that week, it was trading $21 again. And now it's been back up to about $22 and change pretty much ever since. So that brief blip, they had to sweat a little bit, but now they're looking pretty good. Those 20 puts are looking like they're a pretty good candidate to go out worthless. And these people are going to keep about $160,000. That'll get you, I don't know, an entry level used Ferrari, probably, Mr. Rock Lobster. What say you?
Well. Let's just see what happens here with Wendy's. It has the whiff, I have to say. It also has the whiff of being correct. Because aren't we rolling right into a December expiration
in about a day?
Tomorrow?
Yes.
And there is still some substantial open interest on that strike. So, let's see, 29 cents. That is that starting level. That's that starting level vehicle with the little dancing horse on it, the prancing horse on the front. So I would say, yeah, and they're not too worried about it at this point. So I think they're gonna slide under the gate. And note, they're offered a nickel and they have no interest in buying them back. So I think, yeah, line in the sand for Wendy's is another, I don't know, what is that? 50 for 50 on line in the sand puts over the last, 5
pretty
years
much. We profiled one recently that blew up in their face, and that was strange to me. I think it was on Monday's show with the Rock Lobster or with the Meatball, because it was weird. It's like, wow, we haven't had a line in the sand blow up in your face in quite some time. So it stuck out. Right. It stood out to me, which shows you how rare it is. But I know Mr. Ewan Sinclair is a big Ferrari aficionado. I'll have to ask him next time he's on what the good entry level Ferrari price is, because we've been working with this like $250,000 level. But maybe you can get something done with $160 out there. I'll have to ask him and see what a good threshold is for the proverbial girlfriend's Ferrari. Again, send your hate mail to the Rock Lobster. As we keep on rolling, let's do one more here before we get on out to the folks here. Let's go back to November 8th, a few days earlier than the previous trade. And we went back to AES Corp. This one's been a frequent offender on the network of late, finally paying some of these off. Ticker symbol, of course, AES. At the time on November 8th, we profiled, again, line in the sand, go figure. The 23 puts going up out there for 30 cents, about 5,000 times, right on the bid pretty much. The stock was $24.63, which, spoiler alert, is pretty much almost exactly, until a few minutes ago, was almost exactly where it is right now. It was right around that $24.60 level earlier today, and then now it's down to about $24.36, but still pretty close to that level. That was about a 28-29 vol when they sold these bad. Let's look at the stock here really quickly and see if this one had any flirtations with danger. Yeah, this one hit on November 30th, again, around that same time, right after the Omicron sell-off kicked in. This one hit $23.38 on November 30th, and then it rallied again up to about $25 almost. Then it sold off again just this Tuesday to $23.61. So it has flirted with the 23 handle a few times. And again, we're not done yet. These are all expiring tomorrow, so anything could happen between now and tomorrow, as we've all seen out there. But as of right now, these puts are still open, and they're looking pretty good. The paper's up about $1.50 on this one. So that same level of maybe an entry level or perhaps a used Ferrari for your significant other, Mr. Rock Lobster.
Yeah, we've got two. I think we have. Maybe you know what they're going to do. I think it's Christmas time. I think they're going to do his and her Ferraris.
Oh, there we go. Matching. I like that. And you get a Ferrari, and you get a Ferrari.
But what you do notice this time is it's like I would say there's, as in one of the floor guys I thought was always funny. He was a really excellent trader, but this, I would say, he would always say, this is giving me a tickle, So, as in, it's kind of close. It's probably going to go out worthless, but you're paying attention to it. So the old risk management is getting a bit of a tickle on this. So.
In my experience on the floor, when someone talked about tickling, it was usually in an unseemly fashion. So probably best not to linger on that. Instead, let's just keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get to it. And listeners, we are still just bouncing around that 20 handle out there in VIX land. But of course, this week we asked you, will VIX close at the end of the year above or below 20, aka slightly elevated or perhaps not so much? And right now, once again, you folks are just almost exactly the same as where you were the last time we did this poll, which is fascinating. 48.6% saying above 20 and 51.4% saying below 20. So you're right on the knife's edge out there, listeners. This goes away in, let's see, you got about a little less than a day left. So right around Volview's time tomorrow is when this goes out. So get out there if you haven't already, listeners. Make your voice heard. Join in the fun out there because, man, it is interesting. And again, it shows just how topsy-turvy this vol environment is right now. All right, let's go out. We got some good questions. Poor guy's been waiting for a while, James. Let's go out to the live first because you know you secret club folks. Near and dear to my heart. We've got Luigi. Luigi wants to know, does the Lobster think that Roe will be a factor next year, or do interest rates lower than 10 really matter? And we got a snide comment from Unlimited saying, Luigi, maybe Roe finally got that Euro and it will come back. I believe, who is it, Dan or Brian? One of those two who made that Roe Euro joke. So a callback to earlier episodes on the network this week, listeners. Don't know what the hell we're talking about. Check out Options Bootcamp, Options Playbook Radio to learn more. But Mr. Rock Lobster, the chat wants to know, is Roe going to be a factor next year, sir?
I don't think so. Well, also too, you have to think of like what kind of position do you have to have on for it to be a factor. So, I mean, if you're putting on, 25,000 lot boxes in the SPX, yes, it could be a factor. If you got a 3 lot of leaps, 10 lot, it's not going to. Interest rates go up, the value of calls go up. Just remember that. So calls go up, puts go down. So if you're long some in the money calls, you might get a little bump from interest rates going up. But rest assured, the liquidity providers have already started to jack up the rates, their forward rates going out. So that adjustment is being made, I'm quite sure, as we speak. So, a lot of that is already telegraphed.
Mr. Uncle Mike, we were joking not that long ago on the network, when people start asking about Roe, when it's time to do like a webinar about Roe, perhaps the worm is turning out there. What do you think? Are we at that moment? Is Roe, dare I say it, meaningful again, sir?
I think it is always meaningful, even now, because it has kind of a ripple effect with where things are going. So here's where I'm going with this. Right now, if you were to go, I shouldn't say right now, if you were to go back to the days when we had interest rates like maybe 15, 20 years ago to where like the 10-year was maybe 4 or 5%, something along those lines, the debate was always, at least in the financial advisor world, this maybe wasn't a debate, I don't know, at least it was a debate in my head. You could get an indexed annuity with 0 for your floor, meaning the insurance company will guarantee you won't lose any money, but something like 8% would be the most you could make, and it's based upon the S&P 500. It would be capped after that. And so essentially what they're doing is they're just setting up some type of a collar to where the put is closer to the price of the underlying when the call is further out, and they're just trying to take advantage of the skew is ultimately what they're doing on the inside of it, using options, futures, et cetera, whatever they're doing. But then the question becomes, your risk is really not, you're going to get between 0 and 8%. And that's great. But the problem is that you can get a guaranteed 5%, let's say, in the 10-year note. Now, right now, if you were to look at it, and I haven't sold an indexed annuity in I don't know how long, but they're a very unique tool for a unique situation. That's kind of my take on them. But with that being said, right now, what your debate is something along the lines of, let's say you can get between 0 and 3% for an indexed annuity based on the S&P 500. And I don't even know if that's what the rates are right now, quite frankly. Or you can just invest in the 10-year note and you can get 1.4% guaranteed. And so by doing this, Roe has a factor in that the spread typically becomes more and more interesting as between indexed annuities and, let's say, the 10-year note, the 2-year, whatever the case may be, it becomes more and more interesting, so to speak, with the higher that it goes. Because right now, just where interest rates are, people are just like, well, forget the protection of it. I'm just going to go with the market, because after all, the market always goes up. And why not just do a bunch of dividend paying stocks or preferred stocks instead of even messing with any protected stock portfolios that we have at RCM, because we have a bunch of hedged portfolios or indexed annuities. I'm just going to just take my chances on dividend stocks. So where I'm going with this, Roe plays a factor, because right now with interest rates lower, it's going to drive people to do less protected things. Whereas when Roe is higher, I believe that ultimately it's going to drive people to do more protected things because of the fact that you can set up that kind of the collar to where you can make it a little bit more favorable because of a higher interest rate. And if, like what Andrew said, calls are more expensive when Roe is higher, that means you can sell calls for more premium and work things out like that. So if Roe is higher, it's going to be a flight to more safety, in my opinion, because people are going to be more attracted to yields, bonds, because they'll actually pay something again. They pay next to nothing now. Or they're going to be attracted more to protected or hedged products, because the hedge can look a little bit more attractive. So that's my long-winded answer to something that is kind of the fifth wheel in terms of the Greeks, and that's Roe.
Nobody out uncles the mic. By the way, Luigi said he asked that, Mr. Rock Lobster, because the lobster is older than dirt and probably remembers high interest rates. See, the fresh-faced spring chickens that Uncle Mike and I are, we don't know such things as high rates of the late 70s and early 80s. We were but mere chillins. We had no idea what was going on with high rates out there. Let's go to this one. I feel bad for this guy. He's asked this a while ago. We get so busy on the show. Things have been popping off, Omicron, and we get a lot of great questions in the live, so they always have to get precedence here. But Mr. James asked this a while ago, so let's get to him. James Lovall, good question. He says, hello, Mark. I've noticed that there is a particular type of spread that frequently goes up end of day on many of the meme stocks that have been squeezed. Deep in the money call credit spreads go up every day for stocks like Backed, etc. The spreads are always put on for the price of the spread between the strikes, so it seems like zero cost downside. Is this a type of trade frequently done, or does this seem like one trader / institution / fund is exploiting an opportunity they specialize in? This might be a mundane, boring, everyday occurrence, but I thought it was interesting. When I find opportunities like this in my paper trading account, I actually get messages saying I can't put the spread on because it's blocked by my broker. We won't mention his broker here. But interesting stuff here. Yeah, this, I have to say, James, I have not seen the activity that you're speaking of, but when these names are popping hot and heavy out there, we do see a lot of paper that is analogous to what you're talking about. Whenever you see this kind of stuff, usually it's conversion reversals, so synthetics on the same strike, but occasionally it can be doing a spread for effectively the value of the spread. We see a lot of these types of synthetics and other types of trades where you're right. The institutions are kind of moving some positions around, trying to get some exposure or take some exposure off the board. Mr. Rock Lobster, like I said, I have not seen the particular activity that he's mentioning in these names. A, have you seen these types of things, in particular, call credit spreads going up effectively for parity? And then B, if not, or even if you have, what are your thoughts on it, sir?
That's kind of be deep in the money call credit spread. I mean, the thing that I'm looking at is BKKT. Usually you see that for div plays. I don't.
He says every day though, which is weird. You don't see div plays every day, right? You see them on X div time. That's it.
Yeah. Kind of a weird one. Deep in the, the spread's always put on with the price of the spread between the strikes, so it seems like zero cost downside. So if somebody is selling the spread for even, trying to sell a $5 spread for $5 or $4.99, that's an odd one. I'd have to see the exact trade, unfortunately. So, Mr. James Lovell, if you have, like I tell all my students, I am not a mind reader. So we need exact trades to be able to analyze them. That's all I could say. The potential would be in like a hard to borrow. If somebody is doing that and they're trying to get away with something. So I could come up with reasons, because that would be a cost of carry trade. And I could, most cost of carry trades are div, hard to borrow, or, trying to create that synthetic put spread for, even money, which is trying to get you downside, which you've already mentioned. So, anyway, those are the things that come to mind on that.
Yeah, I have not seen this, and especially not the verticals. That is weird. The Rock Lobster's right. The only time we really see in the money verticals a lot these days is around div plays. And the reason they do that is because OCC got wise. People used to do wash trades, rather buying and selling the same strike over and over again. OCC got wise to that finally, and they said, yeah, you can't do that anymore. So they've graduated to verticals. That's kind of what they're doing over there now. So you see that in some names that are going ex-div. You'll see verticals instead. They're still effectively kind of wash trades on different strikes, and they're looking to try to capture that div, skate in on that div. But outside of that, yeah, verticals, I have not seen this. So James, if you have evidence of this, I'm assuming you've seen this enough to write into us. So send us some examples. By the way, I'm sorry it took so long. We just get so many questions sometimes. We get overwhelmed as we keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, time to go around the block. Let's start with the Unklest of Mikes. Mr. Uncle Mike, when you're not eating that gyro and watching that row, what are you watching for the rest of the week, sir?
As much as I love to watch row, watching the market right now in terms of we're right at the precipice of new all-time highs, seeing if we can break through. Seeing if we can continue from yesterday's rally, or seeing if we're just taking a break for the rest of the year. Also watching the 10-year note. We're kind of in the middle of the range right now. I'm curious to see which way we go with that. And then volume's going to start to become lighter as the year comes to an end and we get close to the Christmas holiday and the New Year's and all that fun stuff. And just watching to see if the lighter volume can give us some bigger moves one way or another. I don't think it will, but I could be wrong.
Some might say Uncle Mike is on the boat with the 10-year note. Mr. Rocklops, I know you're not on the boat with the 10-year note. What are you keeping an eye on? And what is Volman watching, sir?
Volman is watching the curious, the curious action on the vol futures are not quite on the highs of the day, but, the Qs are down 2%. And it does appear that the futures are picking up. So I would say anybody watching, watch the short end of vol. You really want to see a hard contango all the way, and we don't have that right now. So that's still a little bit jiggy in my book about where VIX can go. So still, I would say more up or down instead of sort of that press lower. So that's what that's what Volman is watching. Me personally, are these commodity stocks going to play off? Again, I've been collecting, getting a little longer them down here. I've got out of most of my big tech. I've reduced 75% of my exposure this year. And for most of the year, I've regretted every sale. But anyway, I just do that as a matter of course, because I think the levels are getting pretty high. So I've trimmed to the bare minimum. So right now, oil, commodities, and drug stocks are what I like. And until something tells me otherwise, and then I'm going to stick with it. So those I'm watching to see if we do get the kind of the big, the unwind of a little bit more tech, and get into more kind of the more vanilla stocks that are what I think are fairly inexpensive given, their dividend yield and everything else. So that diehard fundamentalist doesn't quite go away. The
diehard fundamentalist, indeed. And if people want to reach out to that diehard fundamentalist, or maybe to his superhero alter ego Volman, where should they go? What should they do?
Optionpit.com. We've actually added so many great other, traders, Bill and Leisha, and their products are doing really, really well, as are Mark's and mine. So if you want to put some learning on an Option Pit and kind of see how this trading thing and this using options goes, take a look at go to optionpit.com, go to memberships.
There you go, optionpit.com/memberships. And Uncle Mike doesn't have a membership, but he's got cool content and videos and everything else. Mr. Uncle Mike, where should they go to learn more?
First off, follow me on Twitter at Mike TOSAW, TOSAW. Feel free to check out my website, stcharleswealth.com, or you can check me out on YouTube. Got the first video up. I'm promising 50 more by the end of 2022, working on them as we speak. Very excited about it. So if you're looking for a financial advisor who delves in the option space, absolutely loves what he does, because this is his life's work, feel free to reach out to me in any of those avenues.
There you go. Learning options with Uncle Mike. Begin your journey at Uncle Mike. Here you go. At Mike TOSAW on the old Twitters. And, of course, stcharleswealth.com is the place to go. We got to go on out of here, but I'll be back in 26 minutes for my big end-of-year recap with Mr. Derek Salmon from CME over there on TWIFO. Look forward to that. Of course, back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. Got some great guests. Got Matt McFarland joining us from MyAsk. Got Jem Carson joining us to kind of break down the year of vol and everything else. So it should be a fun one on Vol Views. And then after that, for you Secret Club folks, options, oddities, talk some unusual activity, some live trading, all that fun. And then back again next Monday, another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.